All right, let's dive into one of the biggest stories hitting the financial world right now. A global investment titan, Blackstone, is making an absolutely massive bet on the future of Indian banking. And the number behind this deal? Well, it's pretty staggering.
6,200 crore rupees. Just let that number sink in for a second. This isn't just an investment, it's a huge vote of confidence from a global giant in an Indian bank. And maybe, just maybe, in the country's entire financial system.
So what's really going on here? In this explainer, we're going to peel back the layers on this deal. We're not just going to look at what happened, but more importantly, why it's happening and what it could mean for the whole banking industry. So, here's our game plan. We'll start by introducing the major players in this landmark deal. Then, we'll get into the nitty-gritty of how it all works. We'll ask if this is a strategic win-win for both sides, look at the ripple effect across the industry, and finally, check out what happens next.
First things first, let's meet the two companies at the very heart of this massive transaction.
On one side, you've got Blackstone. These guys are a global private equity powerhouse, a real titan managing enormous amounts of money all over the world. And on the other side, we have Federal Bank, a really well-established Indian private bank from Kerala, known for its strong focus on everyday customers and small businesses. So this is really a classic story of global capital meeting a powerful domestic bank.
Okay, so how does a deal of this size actually get put together? Let's break down the nuts and bolts of the investment, shall we?
The key to really getting this deal is understanding what they're using, something called warrants. Now, this isn't just a simple stock purchase. A warrant gives Blackstone the right, but not the obligation, that's key, to buy shares later on at a price they agree on today. So think of it like a high-value voucher that lets you buy shares in the future at today's price.
So how does this whole voucher thing actually work? Well, it's basically a three-step process. First, Blackstone pays 25% of the total amount right away. That's their down payment. In return, they get the right to buy almost 27.3 crore shares. Then, they've got an 18-month window to pay the other 75% and officially turn those warrants into a nearly 10% stake in Federal Bank. And here's the really smart part of the deal, at least for Blackstone. That price is locked in. It doesn't matter how high Federal Bank stock goes in the next year and a half, Blackstone's price is fixed at 227 rupees per share. So, that brings us to the big question. Why? What's in it for Federal Bank, and what's Blackstone hoping to get out of all this? Let's unpack the motivations here.
When you look at it, this really seems like a strategic win-win. For Federal Bank, it's a huge injection of cash that gives them fuel to expand. Plus, they get the expertise that comes with a partner like Blackstone. And for Blackstone, this is their big ticket into India's highly regulated but super fast-growing banking sector. They're betting on India's future growth, and they even get a board seat, which means they'll have real influence.
And you don't have to take my word for it. Federal Bank CEO KVS Manian basically confirmed this himself. He said this money is all about beefing up their capital to power growth across their most important businesses. Okay, let's zoom out a bit, because a deal this big doesn't just happen in a bubble. It sends some powerful signals across the entire Indian financial industry. Now, this is really important to understand. The Blackstone Federal Bank deal isn't some kind of anomaly. It's actually a perfect example of a much bigger trend. We've seen a tidal wave of global private money pouring into Indian banks in 2025. It signals a huge amount of interest from global investors who want a piece of one of the world's fastest-growing markets.
And the scale of this trend is just massive. Just look at the other deals going on this year. RBL Bank, IDFC First Bank, Yes Bank. We're talking tens of thousands of crores being invested by major international players. The Blackstone deal is really just the latest and one of the biggest chapters in this story.
So, where do we go from here? The announcement is one thing, but the deal isn't done yet. Let's look at the hurdles they still need to clear and the key dates to keep an eye on. There are really three critical stages ahead. First, on November 19th, Federal Bank needs its own shareholders to give it the thumbs up. Then comes the waiting game for the big regulatory green lights from the Reserve Bank of India, the RBI, and the Competition Commission. Once those are cleared, that 18-month clock starts ticking for Blackstone to make its final move.
Of course, no deal this big is a slam dunk. The biggest hurdle is getting that regulatory approval. That could delay things or even change the terms. There's also a small risk for Blackstone. If for some reason they don't convert the warrants, they lose that big upfront payment. And beyond the numbers, There's always the challenge of making sure a global investor style fits with the culture of a local Indian bank.
So as we wrap this up, we're left with a really fascinating question. Is this just one more big deal, or are we actually watching the dawn of a whole new era for Indian banking? An era defined by deep ties to global money and a laser focus on growth. Only time will tell for sure, but this move has definitely set the stage for a very interesting future.